Hello traders, welcome to Trade Forex with Gabe, and this is your weekly Forex forecast, and we'll be looking at market setup for June 26th through to June 30th. As always, we'd like to start off by looking at the fundamentals and how these fundamentals will impact on the market. Last week was an interesting week. We saw the sudden hike in interest rates coming out from Great Britain, and we saw how that strengthened up the GBP pairs across board. This week, we pretty much have a clear run, except for Thursday, where we'll be having an interesting high impact news, which will be impacting on the United States dollar, which is final GBP quarter in quarter, and then the unemployment claims. Aside from that, on Tuesday, we will have CB consumer confidence affecting the USD. And then we have Bank of England governor speaking, and also Fed Chair Powell speak. I don't think much will come out of this speech, but traders should look out for this important data, which is GDP quarter-in-quarter news that will come out Friday. We have core PCE price index, also very high impact news to affect the dollar. Let's look at how this the currency strength meter is playing out for the week, which is on a forward-looking basis, projecting from events of last week and how it's going to affect the week for June 26th through to 30th. Now we see Canadian dollar on the strength side, pound sterling strengthening up. We still see Swiss franc maintaining its strength for the past about 4 weeks now. We also see euro making it to the positive side, and the dollar sliding down to neutral, bearish to neutral section. We also see gold on negative 1.2, New Zealand dollar negative 1.4, Australian dollar 1.8. But we can't make much sense out of this until we make a comparative analysis, which I've done for you. So here we have the comparative analysis, looking at comparing it with data we had from the previous week. So we have the biggest positive to negative net change. So you see here, Swiss franc is still retaining some strength from 1.7, and it gained some strength to 2.0 for the new week. We see pound sterling from the previous week at positive 0.5, and this week is scoring 2.2. We also see Canadian dollar scoring from the previous week 0.8, and this week is scoring 2.7. And then euro from 0.4 this week is scoring 1.2. The dollar is on a bearish to neutral basis, so it's not coming out top on my list. You see it's maintained the score of 0.2, and this week also 0.2. So I won't be looking much to it. And together, we also see gold also moving from positive 0.9 and sliding to the negative zone at negative 1.2. So when gold and dollar is on the negative section, we seem to, it's projecting that we'll have a ranging trade for the week. Okay, so it's not going to come out as a top priority for me. We also have NZD scoring 0.8, negative 0.8 from the previous week, and this week on a forward-looking basis is scoring negative 1.4. Australian dollar plummeted last week, and it moved from the positive range to the negative, scoring second lowest bearish pair for the week, and that's at negative 1.8. And Japanese yen having a negative score of negative 7.5. So these are the pairs. So this matching up the strongest pairs to the weakest pairs, we've been able to work out the data for you, work out the best pairs to look out for, and those are as outlined here. So my top Forex market setups for the week will be NZD, Canadian dollar. I'm looking to go short on it. Canadian dollar, Japanese yen, GBPJPY long, GBPNZD long, GBPAUD, I look to go long on it, and NZD Swiss franc short, AUD Swiss franc short, Swiss franc Japanese yen short. No, sorry, long. I think I made a mistake here. Okay, this ought to be long. And then we have Euro NZD long, Euro AUD long, and Euro Japanese yen long. So let's go into the details, exactly how the setups are looking on the real chart. And we'll start off with NZD card. On NZD card, I'm still looking to go short on this. I expected this is a breakout from this particular channel. And ultimately, I'm looking for greater shorts down to the level 0.7954. Don't forget, we're looking at the daily chart. Taking it at, looking at the weekly chart, which is H4. First and foremost, I would like to see price take out the last low, which is at 0.8065 level. This should give us we have like 36 pips away from that. But don't forget, last week we had a very nice sell-off on this pair. Look at that. We had about 132 pips sell-off. So we could see some correction before price begins to make another sell-off to the 0.8065 level. And that will give you a good risk to reward ratio. Okay, but ultimately what I'm looking at is for price to drop or make a deep sell-off to the 0.7954 level. Next on the list is Canadian dollar Japanese yen. Let's go there. Canadian dollar Japanese yen. And on this pair, we know too well, Japanese yen, it's been really weak for the past about 3 to 4 weeks now. And I would just encourage everyone to be careful on it. You can see we've been having nice, for the past 3 months now, right? This is first month, second month, and this is the third month closing up. We've just had a major sell-off on Japanese yen because of their the BOJ unwillingness, to fight this. Okay, they are not making any interventions, so it's just on a free fall. But of course, we should expect some correction, okay, on this pair. And when it comes, I hope you will not be caught on the wrong side of that correction. But in the meantime, for this pair, Canadian dollar really showing us a good strength. I will expect to see a buy or a rally above the last high, which is around 108.97 level. And the new high I'm expecting price to rally into is the 110.35. Now let's see what that portends for us. This is just about 140 pips rally. Okay, so please put in your risk to reward. In short, to calculate where your stop loss will be, we can see this is really obeying textbook rally. We are having the higher highs, higher lows, just pure textbook rally or bullish setup. So you can use the last lows for your stop loss and target the next high, which is at the 110.358 level. Next on the list is Great Britain pound against Japanese yen. Let's look for it. GBPJPY. Okay, there you are. So on this pair, you will see price has been traveling on a channel. Okay, very nice and fantastic channel there. Look at that. Let's look at it on the weekly chart. Okay, so here we are. It seems to be breaking out, and this is also coming from the weakness we have in the Japanese yen. There seems to be no abating of this unwillingness of the Bank of Japan, to intervene on their currency or to fight the curve, interest curve on their pairs. So right now, what we have here is a new rally. I expect price. We see that price has already broken away from the last previous high, and we see that here. So traders, you can use this as the new like a stop loss level, but I expect price having broken away from the last high should make it to the new high around 185.20 level. Again, you see Japanese yen, what we have here on GBPJPY. This is a 3 month rally, okay? We had from the previous 4th month behind, we had ranging market, but look at this, all rallying all through the way. So this is June, this is May, this is April. All right. So we can see that Japanese yen has really, really lost a lot of steam. So we could still take advantage of that market, buying into the level 185.20 level. Next on the list is Great Britain pound against NZD, that's New Zealand dollar. And this is it. I'm looking to buy on this pair again. I was long, I think, was it last week? Okay, so we've been looking for price to take out this. I think it was the previous no, 2 weeks ago. We had an analysis on this pair where we were expecting price to take out, the last high. And you can see that we already achieved that last week. Okay, the week we gave this analysis, price just made it a little bit above the last high. And of course, if you understand my trading strategy, I don't enter all of my trade at one point. So I try to, break it, what I call grid trading. So I try to enter at different levels. So when I see the retracement, that gives me, I cover up my shorts losses. But ultimately, we're able to achieve the rally, the target we set for 2 weeks. That's the analysis for the previous 2 weeks. And we got that at 2.0728 level. Going into the week, I expect price to continue on this rally path, and that is making a rally. Pound sterling is really strong from the rate hike we saw from last week on the Bank of England. I expect price to rally up to 2.09816 level. Okay, so you could use the established levels to estimate your entry and your stop loss level. Next on the list is GBP Australian dollar. Let's get it out here. GBP Australian dollar, we're still making a new rally into the previous high. We started seeing that inverse head and shoulder pattern here. I don't know if you can see it, but it's just there glaring at us, yeah? So when we had that inverse head and shoulder, it's just more of a proof that the channel is holding. So this is coming out as the top priority trade for me. I will look to short long this into the last high and expect price to even break higher towards the 1.9387 level. So last week was really a bullish rally on pound sterling. So price does not just move in a straight line. So we should expect some level of retracement before we see this push into the last high, the previous high at 1.9180 level. Let me give you the pip distance from that. This is about 133 pips, and into the ultimate level we're expecting is about 342 pips. So be sure to make a proper risk to reward calculation while going in on this trade, or space up your grid levels as you trade this particular pair. Next on the list is NZD Swiss franc. We're looking to go short on this. Let's get it out. NZD Swiss franc. All right, nice. So here we have, looking at it at the bigger picture on D1, you see we have a very nice bearish structure, okay? We'll be having the lower highs and lower lows. And of course, right now, I think which week did we make this prediction that we expect price to, be rejected at this level, having seen that price has been traveling on this channel down pattern. So price got rejected at this high, that's the upper boundary of the channel. So it's already making its way, or its journey down to our expected level. I think this should go up a bit. Yep. So my target is to see that price takes out the last low, and that is at the level 0.5433 level. These are really high priority trades for me. NZD was really weak, and Swiss franc still maintaining the strength into the week. So expect a drop, and this could give us or fetch us some, cool 77 pips into the week. Okay. Next on the list is Australian dollar Swiss franc. Australian dollar, Swiss franc, just a moment, let's get it out. AUD, Swiss franc, there it is. And you see another interesting setup here, price traveling within a channel. Unfortunately, it didn't make it up to the upper boundary, but we could see that this is a key price level. And as soon as price got to this level, it got rejected. And here we are on our way down to the last low. So taking it down to the weekly chart, or I mean H4 chart, we will expect price to sell off towards the last low, and that is towards the level 0.5870 level. This should be able to fetch us some nice 113 pips into the week. Well, don't forget, markets can also give us that correction before making it decent. So put all this in perspective as you plan your trade. Next on the list we have is Swiss franc, Japanese yen. Swiss franc, Japanese yen, just a moment, let's get it out. Yeah, this trade was one of the trades we analyzed, I think about 2 weeks ago, last 2 weeks ago, yeah, when we saw this breakout, and we took a measurement that this will be the profit target into the week. Last week, price made a retest from the breakout point, and we see we're already headed to our profit target. So from last week, we expected to, no chance for it to have rallied 315 pips, but it made it about 173 pips. So if you're jumping in on this trade, you may be a bit late, but then you can still recalculate how your risk to reward ratio will be. But for a breakout from this channel, I expect price to rally up to 161.71 level. Really interesting trade, but don't forget Japanese yen has been one of the major shorts for the last 3 months. So at any point, we could have that intervention coming from the Bank of Japan. And like I said, hopefully you won't be caught up at the time those interventions will come from the Central Bank of Japan. What else do we have here? We'll be moving on to the Euro pairs. Now let's look at EURNZD. EURNZD. Okay, there it is. And EURNZD, we're looking to go long on this pair, okay? What we see here is like a textbook flag pattern. And from a flag pattern, what we expect is that when price rallies up like this, it should give us this flag pattern, and then come the breakout, and of course, make a measurement again, and you'll get the profit target. So I wouldn't want to stretch it, so I just took a conservative TP level, and that's at the last high. If you are going to get exactly this, you'll see it's still giving us the exact last high, which is here. So this is just a textbook flag pattern. And well, conservatively, I would look to take profit at 1.8039 level. If you want to stretch it, you can stretch it to 1.80772 level, okay? But I expect price to rally on this pair. So use your trading strategy, find your entries, and you can trade all along that path. Next on the Euro pair is Euro Australian dollar. Let's look for it. Euro Australian dollar, there it is. And also, again, I'm looking to go long on this pair according to our forecast for the week. So you can see from the daily charts, we are looking at a structure to the upside and price traveling on a channel up pattern. So what we see here is I expect price to take out the last high before making it to the upper boundary of this channel. So I will expect to see a rally into this high, which should give us about 184 pips, and the level is 1.6493 level, okay? So, but then we had a major rally from last week, okay? A major rally from the sell-off on Australian dollar, okay, from last week. So this was a 368 pips rally. So you could see some correction, okay, before price begins to push up higher. So please don't neglect this rally, okay? Some people will just jump in immediately. Even if you have to jump in, don't jump in with all of the lot size you intend to move into this trade, because once price begins to retrace, it gives you an opportunity to open up the balance of the lot size, your account can carry for this trade before we begin to see the push up higher. And lastly, last but not the least, is the EURJPY. So EURJPY, of course, my reservations on Japanese yen. We see clearly we have a breakout from a channel up pattern, and this should give us a profit target towards the 1.64.361 level. So, but I would still stress the caution for traders on Japanese yen. At any point, we could begin to see those corrections. But at the moment, all is set up for this technical pattern that has been voided by this breakout, okay? So once we see this breakout, I'm expecting price to rally up to 164.36 level. It's a long way, so we don't expect price to just travel all the way. You see that over 750 pips. So it will be a gradual push up there, but then you have to trade conservatively as long as JPY is involved. So we have 11 pairs we looked up this week. So whichever it best suits your trade, don't forget to use correlation analysis to pick out the best pairs you should trade. Okay. Until next week, I hope you make some money this week. And if this video has helped you to become a better trader, don't forget to share to another trader. Don't forget to like, and don't forget to comment on it. Thank you for joining us this week. All the best for the week ahead. Until next week, bye-bye.